Good afternoon and welcome to the weekly SONAR Market Insight webinar. Brad Ganane here with Zach Strickland. We are going to get started here in another minute. We're waiting for a few more people here that are registered that haven't quite signed on. So hang tight here and we will get going. And also don't forget your Q&A section here at the top ribbon for you to ask questions as we go throughout this webinar. So hang tight, we'll get started here in a sec. Okay, we're going to go ahead and get started. Again, welcome to the weekly SONAR Market Insight webinar. Just a reminder, this is not a 101 session. We are going to jump in and show you more how to use SONAR and the different use cases that we've created here that you can go in and look at the regions that you move most frequently from, whether you're a shipper, broker, or carrier. And we're going to provide kind of the setup around how you can look at the different data sets that we have. And we're going to focus mainly on showing and discussing the volume and market share indices, which are fairly new over the past couple of weeks, and draw comparisons for you with the tender rejection indices, outbound and inbound, and some lane comparisons as well. And the whole time keeping in mind that we're going to look at this from a little broader view from the entire country and jump into regions that are most volatile, but you can of course use the same methodology and the same setup for the regions of the country that you ship or move or broker or have your assets in the most. So with that, I'm going to pass it along to Zach, and he's going to get us started here with our market share index.
Yeah, thank you, Brad. So again, to kind of reiterate, this is not really a 101 type webinar. If you guys are interested in learning about some of the basic SONAR functionality, please go to the SONAR website, which if you do have a SONAR subscription, you can click up here on this little question mark and go to Knowledge Center. If you do not have a SONAR subscription yet, just go to freightwaves.com/SONAR and you can get to the exact same page. And scroll down through here, there's a webinar archive that we've added along with various other articles and use cases and all of the definitions herein about how to use SONAR and what the data is inside of SONAR. So for the 101s, please go and utilize that website to learn more about some of the basic functionality. This is going to be kind of the intermediate level type discussion today. So that being said, let's dive right in. So a lot of the questions that we get are, how do I use SONAR on a daily basis? So I'm going to kind of focus on what I would do, considering that we've just added some new indexes, data points that I feel are actually very useful in kind of getting a good idea of what's going on in the freight market out there. So everybody can adjust their their dispatches. If you're a broker, you can adjust your rates, how you manage your carrier base. If you're a carrier, how you kind of understand what's happening in the broader freight market. One of the ones that we've added most recently is the tender volume indices and the market share indices that are based on volume, essentially. So what the outbound tender market share weekly change is, and that's the map that I have pulled up here currently. Basically, it's telling me what markets have had the most significant increase or decrease in market share over the course of the last 7 days. And so market share essentially is, you have to think about it as a pie, and it all adds up to 100 essentially. So the Indianapolis market, for instance, this dark blue area here is roughly about 2.4% of the overall pie. The entire country is 100, and each of these markets are percentages thereof. So this Indianapolis market in the dark blue is one of the markets that we probably should look at, because what this is telling me is the accepted load volumes have increased in relation to the rest of the country. So when you have that kind of imbalance, volatility, movement going in to one area, that means that there's going to be more movement, more potential for discrepancy, capacity constraints, miscommunications, all sorts of things. When things are in motion, basically that means that that's where the opportunity is. Anybody that follows the stock market knows that volatility is where all the money's made. And so essentially what this is telling you is there is movement in the Indianapolis market, specifically accepted load movement. So we're actually seeing more loads in proportion to the rest of the country in the Indianapolis market. Why that's significant is because eventually, if the volume stays relatively high, you will actually run out of trucks in the area, because right now what you're probably seeing is a lot of carriers, trucks moving into the Indianapolis market, covering these loads. If there's not enough loads moving into Indianapolis, for instance, which is something I'm going to illustrate here in a second, you will actually be exposed to a lot of spot market potential.
And that's an important point to note. And why are we looking at market share or volume before we're looking at tender rejections? What is the process that creates loads to be rejected? Why is it important to see what the market share is before, I guess?
So volume basically leads any kind of activity. So the volume is basically the first thing that shows up in any situation. So tender rejection is a carrier activity. So once they have evaluated the volume and the market discrepancy, then they act by rejecting or accepting the load. So volume actually precedes the tender rejection. For instance. So it doesn't necessarily guarantee that with increased volume, you're going to see increased tender rejection, but the odds of seeing increased tender rejection are there when you see increased volume. Hopefully that makes sense. Like there are very few things out there that 100% predict an action, but there's a big correlation between volume and market volatility. So anytime that you see significant unexpected volume, which is the key phrase there. So if this were an expected case where carriers were positioned already in the Indianapolis market, and some of these larger markets have a little bit more slack in them at any given time, especially if you've had a large influx of loads inbound, you can have these markets that are actually oversupplied with trucks, and it's going to create a longer time before there's any sort of destabilization in the market. Spot rates will go down significantly when that happens, as carriers are trying to just keep their trucks moving.
And I think it's important to touch on, or to add a little color to the market share and how we're representing what we say 100% piece of the pie being the entire country, is when you see these specific regions increase in market share, what that's telling you is that there's an increase in volume compared to the country. So if the entire country's volume or all the regions across the country are increasing in volume, you're not going to see an increase in market share. For example, in Indianapolis, right? You're only going to see an increase in market share in Indianapolis if their volume specifically is increasing and other geographic regions are not increasing. Correct?
Exactly. So what I'm going to illustrate next is, and this is kind of the first step of what I do on a daily basis. I look at the outbound tender market share, and that's basically telling me how many basically increased acceptances of loads means that there's trucks moving out of that market. Once trucks exit the market, if you don't have enough trucks coming into the market, you are then exposed anytime there is either sustained volume or elevated volume unexpectedly. And the next thing I'm going to show you is the chart of the market share in Indianapolis, for instance. So what I'm showing you here is the inbound market share and outbound tender market share on the same chart. And I can show them on the absolute scale because they have a very similar y-axis and actually the same exact y-axis, but they're also very close in number. So the inbound tender market share right now is 1.95%. So what that means is 1.95% of all accepted loads in the country are heading into the Indianapolis market as of yesterday. And then you see up here that there's 2.41% of all the outbound loads are moving out of the Indianapolis market as of yesterday. What you shouldn't see a lot of is this spread either widening or staying too separated for too long. It doesn't mean that they're always going to run together eventually. That's not what I'm saying. What I'm saying is they need, if you have this big divergence happening at a rapid pace, that means that there's just not going to be enough trucks eventually in the market to cover the loads. That is, unless the volume declines. Right now, Indianapolis is seeing kind of an increase in volume, and a better indicator of looking at kind of absolute volume is the OTVI. And I'm going to kind of explain the difference between OTVI and OTMS real fast. So OTVI is a better indicator of market volume because where I was describing the pie earlier on the market share, that pie stays the same size. The circle stays the same diameter, same radius all the time. And the individual markets take up larger and smaller slices of that pie. OTVI, the pie can actually expand and contract as well as moving pie slices around with various markets.
And the pie being the nation's volume on an index level. Exactly.
So OTMS.USA does not exist because it is always the same value. OTVI.USA is fluid. It can change.
It's an index value based on 10,000 starting March 1st, and it's, as you see here, shows the fluctuation above or below 10,000 since March 1st, excuse me. So
exactly. So essentially what we're seeing right now in the country is about 1.25% less accepted load volume in the entire country. You see here in June, the middle of June, we had this big spike. We were about 10% more accepted loads in the peak season here in the month of June than we were on March 1st, which is exactly what we would expect. One thing we haven't expected to last this long was this kind of slide and volume throughout the rest of the market. So that's kind of the difference between volume and market share. But what I was getting back to this market share spread, eventually, in the process of evaluating what I should do on a daily basis. So I looked at the market share map first. And another thing that I can do is also look at the tender rejection weekly change map as well. But since you're kind of trying to get in front of things, I think that's the whole point of SONAR, is basically, how do I get the fastest information possible? Therefore, I can get in front of any kind of rapid market changes. I can be the first one to know where to look, the first one to know where I need to focus my energy and efforts. Because right now, the way that the transportation industry works is it's very anecdotal. It's like, oh, I heard this. You talk to the shipper and they'll tell you one thing. You talk to the carrier, they'll tell you another. And then there's several carriers in the space. There's several different shippers, and they all have their own niche that they know very well, but they don't know what's going on in every other niche of the market. And the value of SONAR here is really giving you kind of a heads up on where there's potential for the market to kind of turn on an instance. And even in a situation like we're seeing right now, where volumes are kind of contracting, there's still potential situations that you can go out there and take advantage of, or you can be the first to kind of evaluate and know, hey, Indianapolis, they're having a lot more loads going out of the market than coming in. I need to watch that market closely. If I'm a carrier and, I have, trucks in the area that are dead, that I might need to deadhead, I might be looking for more trucks going in to the Indianapolis market, knowing that I could have a lot of potential loads coming out, maybe position my fleet a little bit closer to the area if I have the chance. Brokers obviously can be watching it for any kind of rate pressure or volatility that they see. They need to make sure that when they're talking to their shippers, their customers that are requesting loads out of Indianapolis, that they're adding enough potential margin on their loads to make sure that when that load ships out in 2 to 3 days, they're going to have a carrier that's going to cover it. Because as we know, that truckload carriers will turn down the freight, as is the definition of our main index, the tender rejection index. And market share is going to be in front of that. It's going to allow you to see where that potential is first, because it's based on volume. So you see here in the Indianapolis market, this is the largest spread between inbound and outbound market share that we've seen since June and in peak season. That tells me right there that there's a big chance that this market is going to have some spot market activity here in the near future if this pattern kind of continues. Back here in late July, it was very tight, very thin. So they've been operating on a nice little equilibrium. Indianapolis is not that far away from Chicago. I mean, relatively, there's a lot of truck density in the Midwest, moving from Ohio to Illinois and back and forth right there. So you're probably seeing some deadhead, a lot of trucks in the area, kind of making sure that this market is covered with the appropriate power. The next thing that I'm going to look at after I've established that this market looks like it's about to pop is I'm going to go to the tender rejection index, and I'm just going to see, has this showed up on the carrier tender rejections yet? Typing OTVI IND gets me there, and what do you know? They're starting to show up. So over the last, let's just make this chart a little bit better. Yeah, over the last, looks like week to almost 2 weeks, we've had significant tender rejection values going up, meaning that the carriers are less likely to accept loads coming out of Indianapolis. It's only a matter of time before the spot market there kind of shows up. But again, you have to consider each market with its own kind of identity. Just because you have increasing tender rejections, increasing volumes, you may not see that in the near term. This is stuff that's going to let you know what's going to happen here in the future. If you are really on top of it and really in front of it, you're actually going to be able to kind of take advantage, because what this is telling me right now is I need to make sure my trucks are around the Indianapolis market if I want to get if I can, cost effectively, being a carrier. Also, brokers, of course, can take advantage of any kind of elevation or capacity crunch, but they're also exposed to these capacity crunches as well. If I'm a shipper in the Indianapolis market, I'm certainly mindful of what's happening here. So after I've seen that the outbound tender rejections are increasing, I'm actually going to kind of go over here and I'm going to look at the TLT to see if the shippers have figured out, hey, I need to get in front of some things because I know that there's increasing volume. And right now we're seeing it just to it's bounced. So we've seen a few loads come out there. The tender lead times contracted a little bit, and now they're starting to go back up again. So some of these shippers haven't figured out that they may need to get their loads out there a little bit faster. Tender lead time, for those of you who don't know, is a measure between the load tender date and the requested pickup date. Something also that can be happening with this is if a shipper is actually sending a load out, some loads out well in advance, it's going to inflate that number because they don't want to flood the market with 400 loads all at once. They know that that's not the way that's the way to get kind of beat up on the rate side of things. But when you have, you can also have a lot of loads come into the market all at once that need to move right away. That will shrink your tender lead time. But it looks like right now that the Indianapolis market is still looks like about average. It's actually gone down a little bit over the last month or two versus the July 4th obvious highs. Again,
and I think that's indicative of what we'll call the process.
Yeah,
when you see the increased market share or increased volume, talking about Indianapolis in particular here, immediately that doesn't mean that your tender rejections are going to go up. First, You're going to have capacity in the region soak up that volume. Then potentially regional capacity from outside of, let's just say, our X market come into that region to soak up that volume. And then, once all of that capacity has been used, let's say at the rate or through the routing guides that they're on, then we start to see, the relationship with the outbound tender reject index start to increase and start to climb as we showed here. And then you start to see, as the tender rejections start to increase, now we see the volatility in the tender lead time, because as we're not getting our typical 2, 3, or 2.5, 3 plus days that region is showing from a tender lead time, that probably has a lot to do with the fact that these regions are experiencing, some volatility, and these shippers are having to scramble because they're contracted carriers, or they're regular guys, if you will, are rejecting the freight here, and they're having to go to others or the spot market.
That's a great point. The Indianapolis market is, of course, in the middle of a lot of it's on the East Coast. So it's in the middle of a lot of freight movement. You got Columbus over here and you got Chicago up here. So what you're going to see is a lot of carriers are going to end up in this region, and then they're going to start getting pulled into Indianapolis from markets like Columbus, Chicago, Detroit, anywhere in the Midwest in general, because it's sitting right here in the heart of the Midwest. So that market right there, you may not be seeing, it can probably handle a little bit more kind of discrepancy on the inbound side versus other markets, because again, the markets out west, they're huge for a reason, and it's because they cover large amounts of geographic space but low population centers. Out east, there's a lot smaller segments. There are a lot smaller markets because there's heavier population density, therefore heavier industrial presence, heavier traffic, all of the above. So these areas are going to be a little bit less exposed to freight market imbalance than you would have like the further west you go and in the middle of this region here. But LA, again, showing this is one of those markets that we kind of watch all the time, and it's showing to have a good solid market share increase here over the last week or so. The LA market is kind of unique in the way that it is sort of on an island, but it also has a lot of truck density because carriers are constantly moving in that area, knowing that there's freight, but it is surrounded by a lot of nothing. You have to go 500 miles to Phoenix, 1,500 miles to Dallas, and then San Francisco is not close, and I think we all know that San Francisco is not a very good market to go into in general. But it does have one of the largest ports and it feeds the country. So LA is a little unique in contrast to Indianapolis, where it sits kind of with all the other trucks. So
I want to go back to Indianapolis really quick, just to kind of continue with the case study, if you will, and show that, okay, we've seen volume driving, we've seen market share driving, this we'll call it this volatility, and kind of pushing it to the edge of, tipping it to, a very volatile point, to where there could be some spot market opportunities or some opportunities for asset-based carriers or brokers or shippers. But can we go a little deeper into seeing, so what is driving the exact tender reject index? So can we show some lanes? Can we show some equipment, so you can see exactly, or more specifically, now that you've identified your region and some of the things that are driving it, let's go a little bit deeper and see which regions are, or which lanes specific are being most affected.
Yeah, no, that's exactly what you do next. Is once you've identified the area that you want to kind of target, and we're doing this on a very deep dive basis. This process does not necessarily take as long as we're kind of taking here, as we kind of explain the relationships between each variable. But the next thing that you do after you've seen, okay, the market share and volume and all that have increased, and your tender rejections you've identified, they have increased as well. The next step is to kind of start narrowing down what we can, as far as you can, to the lowest detail possible. And so I'm going to figure out what lanes, or actually the first thing I'm going to do is I'm going to start dividing it up into equipment type. So I think most of you probably know that we have trailer types available in each market that has enough volume. So if there's not significant enough volume to make an index out of it, then the value doesn't exist. As I've typed in rtry.ind, you can see which particular markets and lanes are available for the reefer tender rejection index. Reefer obviously is a very volatile thing, and therefore there's a little bit less volume of reefer trailers available on the contract side. So it's not going to be as prevalent as, say, the van, which is the majority of the trailer type in the country and the type of freight. But the first thing I'm going to do is I'm going to start trying to divide it up into trailer type, and I'll just go ahead and I'm going to compare rtry to the overall one, and it might actually be better. This is a good example of where your scale might screw this up a little bit. So I'm going to go ahead and just make rtry my main variable on my chart, just so I get a nice look at what's going on here. And I see that reefer tender rejections have gone up, but really, kind of gradually. That's probably not the only thing. They've gone down here in the last day, which makes me think, okay, yeah, reefers are affected, but they're not really the main driving force. So the next thing I'm going to do is I'm going to see what the dry van tender rejection is going to look like. And boom, they're going off the rails. So the type of freight I'm looking for is dry van freight. I've identified that. I'm going to pull back up the Indianapolis OTVI, and then I'm going to start breaking that down into lanes now. So a lot of you may know that we have lane availability, and I simply went in here and I hit compare, and I started typing otri.ind. Now what that does, because I didn't hit enter, this is going to allow me to kind of have a quick view of the biggest lanes in that market space. Because remember what I said when I said that if there's not enough volume in an area or a type, or if there's not enough data available, you will not see the index available in the search bar when you type that in. So what I'm going to do is I'm going to start breaking down some of the bigger lanes. Now, it does not put it in any specific order. It puts it in alphabetical order, but it doesn't give you like an idea of, well, this is, Allentown is not necessarily the largest lane in the market. So that's going to be up to you to kind of pick which markets you want to look at first. So generally what I try to do is just kind of go down the list, and I pick out my favorite markets. Some of them, Chicago's an obvious one. Any of these bigger cities are probably a quick pick. And I go down through here. I picked Detroit. I'll probably want to pick Allentown. It's kind of a large market at the end of a run. Columbus is probably a very big lane, very regional though. And I see Columbus is actually, it's kind of surprising that Columbus is actually operating above the average for the Indianapolis area. But you see that it's kind of cooled off, but it is kind of elevated over the rest of them. What I'm looking for here is anything that does this right here. So this IND to Chicago, that's kind of telling me, that's kind of matching what I'm seeing here over the last day or so. So there's been some freight that's moving to Chicago here that carriers are not potential. They're showing early signs, I should say, of not necessarily wanting to cover that freight. You can see that lane has actually been kind of stabilized over the last little bit, and I'm pretty sure that most carriers are just fine going from Indianapolis to Chicago. But I am looking for any kind of anomalies in general. So anything that looks kind of off to me. Columbus looks strangely off to me, but all these markets are kind of moving a little bit more sharply. It looks like we've got a pretty good checks mix of activity. So the Detroit lane, for instance, had a sharp movement here about a week ago. Columbus had a pretty decent movement before that. And then you had, this flat going to Allentown. It's been pretty flat here in the last week after a nice little gradual jump here as you look at the Indianapolis market in general, as they all kind of correlate together. I should point out, too, that there are some studies available for those of you that are more and getting into some sort of, the technical aspect, a little bit more heavy analysis that will allow you to kind of graph, or it makes it more easy to see what your, like, how significant your movements are. I'm going to go ahead and throw up one right now. You kind of have all these little things. These are all kind of financial market analytics tools that are on here, but all they really are things that are going to enable you to kind of see more clearly what's a significant movement and what's not a significant movement. And as I look at the outbound tender rejection index in Indianapolis, you may be asking yourself, well, maybe 24% isn't that bad for Indianapolis. It's been there before, but what is important is how fast it moved to that 24%. That's really kind of what you're looking for in most of the case. So this Bollinger Band right here, all that's doing is kind of showing you, and you can customize this. I just have on the generic view of the Bollinger Band, and I'm not going to go into any detailed analysis with Bollinger Bands, but all it's doing is giving you a way to kind of see, okay, here's my moving average trend line based on whatever moving average period that you choose. And you can pick that by right-clicking and then hitting Edit Settings. I'm going to throw let's just go 7-day moving average, 2 standard deviations. Those are basically your high limit and your low limit. So that's just affecting these bands right here on the up and down. So if you want to see something that's a little bit closer into your moving average, you just move that down. If you want to see something that's a little bit less sensitive, you move it up. So you see what that does there. When I move it down, the bands get tighter. This has more chance to kind of jump out of either side. And now you can kind of see, yeah, we've had this significant movement in Indianapolis as it pertains to whatever settings I put in there. And you can see here, it's still kind of trying to move out. So you've got enough volatility in that market to pay enough attention to it. That it's significant.
Yeah, I think a good comparison too that we did with Chicago a couple of weeks back is comparing to the national or the US OTVI. So you can see kind of the directional movement and see how it's comparing to the country, just giving you another idea of how that market is interacting.
That's a great idea. And yeah, we've mentioned this before where, kind of when you're benchmarking different places trying to gain an understanding of how different markets work and how tender rejections and the various indices work and how they move, you always need some sort of baseline to measure that against. And you can see here, as I've thrown up the outbound tender rejection index for the USA, which is really just the tender rejection index for the USA, they are moving in different directions. So that actually means that the Indianapolis market is moving even faster. It's literally like you put two people in the middle of a road. One of them's pointing one way and the other one's pointing the other. And you tell Indianapolis to go run as fast as they can that direction. And you tell USA to either, maybe just walk that way, the other direction. And that's what's happening here. You can't see my fingers that I'm pointing in two totally opposite directions. I just realized I was talking with my hands. So the America is walking slowly to the right. Indianapolis has taken off in a dead sprint to the left. Therefore, relative to each other, they're moving even more. That makes that Indianapolis movement even more significant. So that's another way to kind of understand, when you're talking about freight markets in general, thinking about the pie again, like with the market share, you can have decreasing volume in the market, and you can still have volatility in individual sectors. So that's really what you're trying to look for on a daily basis. That's why I look at market share first. And as I break it down deeper and deeper into detail, that's going to allow me to target specific areas, specific modes of transportation, and find the best opportunities in the market for me to do, depending on my perspective.
Let's check out Maine. Let's check out kind of a lower volume area and talk about, what to kind of consider and take into account when you look at these heat maps and maybe you see Billings, Montana blow up, or you see, Western North Dakota blow up, or in this case, Maine, low volume areas experiencing high volatility. How do we take in that or consume that information, and what do we do with it? And, how much do we react to it, being that they're lower volume?
Yeah, no, that's great. That's a great question. So we just evaluated Indianapolis, and we found that we need to pay attention to it. We're not really sure which direction the biggest discrepancies are happening, but we've kind of stated that, hey, we need to pay attention to Indianapolis. Let's go check out some other places. And Indianapolis is kind of a mid-major market in terms of freight. It's not a Chicago, Atlanta, Dallas, LA, but it is a decent sized market, but it's also kind of located in an area there's a lot of truck density. Augusta, Maine market, which is essentially the entire state of Maine, because it's basically trees up there and a lot of water and swamps. So what do you do when you see something like this? I mean, some people would just dismiss it, but these little sectors of the country are really where you can rake up. If you're prepared and if you're paying attention. So,
well, and draw the correlation too with, this could be Western Oklahoma. This could be, some area in New Mexico. So I think keep that in mind, listeners, that, even though we're looking at Maine, we're just trying to show you how you can, draw, or come to conclusions on some of these lower volume areas.
Yeah. So, I mean, now that you've identified Indianapolis, let's go try to find something that a lot of people probably are going to dismiss. I think that's your point, is that Maine is somewhere that nobody really wants to go to. Not a lot of truck density, obviously. But you know what? Maybe there's a day where you have a load opportunity going inbound into Maine, and you can actually increase your margins, or you can take advantage of a situation that you would normally kind of dismiss. If I'm a carrier and I've got a shipper wanting me to push, I've got 2 or 3 loads going to Maine today, I might actually take advantage of what I see in the overall market, because I know that there's a chance that I'm going to get a load out of Maine for once. And now I can actually charge the shipper the higher rate, the Maine premium, and also take advantage of the fact that I know I have an easy way out. Right. So here's outbound tender market share in Augusta, Maine. So you can see Maine does not represent a large portion of the country. Mm-hmm. So we're talking just a handful of not a lot of freight in Maine, as you would expect. But it did jump up. And that's what's important, is that this movement right here, it has basically made you aware that there is a potential discrepancy or potential volatility in Maine. I'm going to throw up the ITMS, in Augusta just to see if this is a big deviation. And you see here, there's actually more freight coming into Maine than moving out, at least on the, so there's really not a large amount of discrepancy here. If I'm a carrier, I'm now thinking, wait a minute, that market is actually kind of in balance. There may not be the same type of discrepancy. I'm still going to look, mind you. Just because there's freight going in doesn't mean they know about everything coming out. So I'm still going to look because I have had this movement here. The inbound loads have come up a little bit as well, but it's not as discrepant as the Indianapolis one. So probably a lot of deadheading happening in Indianapolis. There's probably a lot of regional carriers operating up here that have some consistency moving in and out of the Northeast. But let's go through the process regardless. Let's see what's going on with tender rejections in Maine. And you can see there's really only a couple of lanes available for Maine, and that is due to the low volume. Mm-hmm. You have essentially going to Bristol, Connecticut, the home of ESPN. Maybe ESPN needs some berries at this point. So you can see the tender rejections are actually going up in Maine. They've increased steadily throughout the month of August. Now, next step I'm going to do, I'm going to do exactly what I did with Indianapolis, and I'm going to see if there is a reefer tender rejection, and there's just not. There's not enough reefer volume coming out of Maine, so I can't really break it down into a trailer. I'll go over here and do the one thing that I can do with Maine tender rejections, and that's go to the Bristol, Connecticut lane and see if there is something happening in Bristol, Connecticut. Nope, there is not. So I can at least eliminate the single largest lane, outbound Maine, that exists, and say, no, it's not going to Bristol, Connecticut. There's some other activity happening in Maine that I need to be aware of. Tender rejections are increasing. More than likely, there's some volume. I'll go ahead and pull up the OTVI.Augusta just to kind of validate this. And yes, we have had a lot more volume going into Maine, or coming out of Maine, I should say, over the last little bit relative to what it normally is. Not a lot in relation to the country, but a lot in relation to Maine in general. So again, that's kind of how you evaluate each market. You can tell has a little bit of its own unique identity. You need to keep in mind, SONAR is going to point you in the right direction in a lot of cases. Some of it's going to require you to go the final mile to kind of figure out what's going on in there, but at least you're going to have some sort of awareness of how to evaluate the broader market and individual areas, and it's going to tell you where there's discrepancies, where there's anomalous carrier behavior and whatnot.
And again, going through the progression that we went through, and we're just looking for the most volatile markets from volume, tender rejection standpoint to use as examples to show you guys the greatest changes. But in a lot of your cases, some of you may be doing that, but a lot of times you're probably going to be looking at more specific markets on a regular basis. So the progression you just saw us go through, those subscribers on here, I think, know that you can certainly save those pages, and that's what you can look at essentially every day. And for those who don't know, now you do know that you can save, so you don't have to go in and search and create these screens every day. As you see on the left-hand side there on Zach's screen, you can just click on add, that type of change. But hey, we're not in a one-on-one session, as Zach said, so I don't want to get yelled at. So we've got about 15 minutes left here. We've got a couple more things that we want to touch on, but we're going to go to a question really quick here that I'm going to grab, and it's actually a really good question that I'm excited for Zach and I to tackle. So we are going to, hang on, let me grab it really quick. Okay, and we have from an asset-based carrier standpoint, trying to develop freight network strategy, how can I look at the long term through SONAR if I do not want to chase freight? Understanding that it is a great tool to evaluate the spot market and the opportunities. So,
okay. So yeah, that's a great question. So that's a really, a lot of the time we get a little too focused on the near term and what's going on right now and all that. And there's huge value there. That's obviously one of the largest values of SONAR, but it can also help you in the long run as well. So I think the obvious answer here is market share. So what you want to do is identify, and we just had an article come out identifying the top 5 lanes in the country.
Or regions.
Regions, I should say. Yeah, not lanes. I'm sorry, regions. Misspoke there. So I think the easiest way to do this, instead of looking at the weekly change where you're not looking at volatility, you want to look at the stable version, which is just outbound tender market share in general, or inbound tender market share, depending on the side of the coin you're looking at. I think both are important here. So what this is going to do, I'm pulling up outbound tender market share on the country itself. And obviously the darker blue means that that's going to be the greater market share, et cetera, et cetera. You can see here that Atlanta, Ontario, just outside of LA, Dallas, Chicago, Harrisburg, Philadelphia area, these areas in the blues represent the largest market share in the country. So if I'm trying to maintain a network, I essentially want to think about this as like, I'm comfortable positioning trucks in and around these regions here because I know that I'm going to be able to move out of those regions. To the converse, they need somewhere to go. So I'm going to go to the inbound tender market share, and you see some of them fall off, but there's my freight network on the other side of the coin. I'm going to go out there and I'm actually going to go pull some of these charts and really explore a little bit deeper what's going on in some of these markets. So Stockton, Seattle, inbound is obviously a big one. Not a lot of outbound coming out of there, but I'm going to start with outbound tender share, and I'm going to start looking at how do I get my trucks in position to stay in these markets as effectively as possible. I'm going to go ahead and do I'll pull this up on a chart just so, because you want to be able to evaluate what these markets are doing over time. So you pull up Atlanta, you pull up Ontario, which is essentially the industrial side of LA. A lot of shippers on the eastern side of Los Angeles. Let's see, and you pull up Harrisburg. And you're going to see these places are relatively consistent over time. I'm not going to pull up every single one of them, but I am interested in any kind of bounces or moves in market share over time. So again, long run, these are the areas that I'm kind of anchoring my network around, my freight network.
Yeah. And these are X market regions as well. So that needs to be noted that some of, they're going to encompass multiple cities and a little bit larger regions than just Atlanta or just Harrisburg, PA.
That's correct.
So even having opportunities to, in my opinion, with a destination point passing through, if you're talking about a carrier, an asset-based carrier, and you deal probably a lot with having customer freight and having outbound freight of an area, positioning yourself to have freight passing through in some way through these areas so that if you're not able to get freight back to your origin point or maybe back to your next customer, you can at least pass through some of these higher volume, higher market share regions so that, if you do have to deadhead, at least you have a higher probability of getting freight out of those regions.
Exactly. And one of the things I want to point out too is, unfortunately we only have this data back into March 1st, but again, we've kind of discovered that having data that's too long, it really doesn't do much good in today's freight market environment as it's constantly evolving into something new. So one of the things that I would point out is I want to look at what seasonal movements I can expect in these markets as well as I try to position my freight to cover these loads. So over time, Atlanta has gradually increased into the summer before kind of sliding back down in terms of how they take market share. The Ontario market, to the converse, has really kind of stayed up throughout the entire process. They didn't take off until May, and then now I can plan to have more trucks in the Ontario area, even through July. July really, was a slow kind of month, as I think most would consider in terms of spot market and transactional freight, but it was not slow in terms of contractual freight. So this is kind of a different way of looking at the OTMS. Instead of trying to identify areas that, are more volatile and movie and like they experience large changes, this is kind of a way to look at it and say, you know what, I can count on some decent freight volume in July. I'm going to position my fleet there in July. Atlanta, I'm going to make sure that I have trucks kind of sitting around here. And then you go in here and you start kind of playing with where my some of these larger markets are. And you have a shipper, for instance, as an asset-based carrier, and you know that they're going to ship certain things at certain times of year, going to certain destinations. A lot of places are going to have a static, kind of almost dedicated run. You can go out and kind of plan around your existing carrier or your existing customers' needs. So I can say, this time of year, I'm going to offer you a certain rate, and then I'm only going to offer you 5 trucks, this time of year. I mean, obviously from a dedicated perspective, that would be how that would work. But I'm also going to understand that I'm going to have adverse pricing pressure or capacity issues this time of year. And you can really start to engineer around these seasonal fluctuations as freight flows move in and out of Atlanta, LA, Dallas, Chicago. You can identify some of these one-off cities. Denver, for instance, would be a good one to kind of, I'll go ahead and pull that one up. But I love the Atlanta chart because it really kind of illustrates how much of the capacity it kind of sucks up throughout the warmer months as it starts to slide back down. And keep in mind, this is market share. This is not straight volume. So this is not just like all the volume just shows up in Atlanta. Yeah. It's literally, you have a limited amount of capacity available. Atlanta is consuming that portion of the pie. So that means there's no other pieces, there's no trucks. They're coming from somewhere else.
Mm-hmm. But I think that's valuable information when you're talking about carrier networks based on that question. So you have an idea of the areas of the country that are going to have relative most value.
So let's pull up Denver and see what's going on in Denver. And you can see here, boom. I mean, I know it's not shocking that they kind of elevate, but again, thinking in terms of market share, once the snow melts off the Pikes Peak out there, like significant amount of market share comes back into that area going outbound Denver, which is not an outbound market for most people's perspective.
Yeah. And hopefully that answers your question there. If you need any further explanation, please don't hesitate to ask here in the next 5 minutes or reach out to us via our drop down here on the top right at our little help email at sales@freightwaves.com. And we have a couple more questions here based around the data and the extracting raw data. We do have API plugins to this platform, so you can certainly extract the data into a spreadsheet and sort in that manner. You can have the data as an input to your current system. Maybe it's a TMS or some type of quoting system. You can certainly do that. And we had a little bit along those lines, a similar question of how can we view some of these numbers and percentages as a list, and that is kind of answered with the API. Is probably going to be the best way. In the meantime, if you're on Sonar and you do want to view in list form, you can create a watch list, which we haven't really spent a ton of time on in these webinars, but we can show you really quick how to create a watch list and what it would look like. So you could view these different, you can view, compare across all different data sets. You can, there's a watch list right there with one. You can export from the chart you're looking at, as Zach just did. When he created that watch list, you can, add as many tickers as you'd like. And as you see, looking at market share there in Denver, it's just going to populate the value. We do have the ability to show the change over time. That's not quite been added in. I think it's coming on our next update. So you'll essentially be able to view these different data sets as you would a stock and see the, change over the last day in the value. And if you don't mind illustrating that really quick, I think we have one more question here before we.
Yeah. So all you have to do is, once you've either created the watch list by, you saw at the bottom of the chart there, if you see if I wanted to create an outbound tender share kind of watch list, I would just simply do this, add that value to it, go up here to this little drawing number, and I'd start entering OTMS dot whatever. Of course, you can add OTVI and anything else that's available in SONAR as well. So you keep these on your watch list. You hit add over here, save, and now you've got a watch list that's letting you know. Eventually, we will have change over time and things like that available, but right now we don't. So we have another question.
Yeah, we still have a few more minutes, but last question that I see right now is, do we have any Canadian data? And the answer is yes, we do.
It is upcoming here in the next month, hopefully.
The provinces, I believe, because they're so large, are giving us, our data team, taking some extra time, because I think we want to make a little bit smaller regions than the entire provinces. So they're doing some work and deciding how they're going to splice those up. Is that correct?
That's right. It's creating a little bit of issue on the mapping feature and all that as well.
So yes, it's coming, and also a ton of work being done right now with the container and port data that is being scrubbed and worked on, and I know we've been talking about that.
It's just a hot mess. They've literally got like so much data there that it's hard to kind of organize it effectively and make sure that it's represented accurately. The data scientists have to make sure that, one, it's not full of gunk as well. So they do have to make sure that there's some sort of reliability factor there. That way, we're not putting out garbage data. Yeah. And that does take a little time, especially considering a lot of the data that is out there is really, just a complete mess.
Right. And we are just about out of time here. So if you have any questions, further, sales@freightwaves.com. We're also trying over the next month and a half through the end of September, we're trying out these new screens. We have these 34-inch curved screens that we are providing along with SONAR subscriptions. The screens look great, as you see throughout this webinar. We're on a smaller screen, so you can really only view 1 to 2 at a time, and distorts the view. So this massive screen that we're including in SONAR subscriptions really looks awesome and allows you to view several different markets at once and several different data sets. So another nice feature added in with your SONAR subscription and data.
Can I get one?
You cannot get one. But I think that just about does it. So again, any questions further from this webinar, sales@freightwaves.com, and we'll help you out. And also you can contact us through the website, www.freightwaves.com/SONAR, or just click on the SONAR tab at the top of freightwaves.com, and you can schedule a demo or schedule a talk to someone on our team if you have any questions, as Zach illustrates there. Thank you again for joining us, and we'll be here again next week at 2 p.m. for your weekly update.